Next agenda item is our fiscal year 2017-2018 audit report.
Mr. Meyer, Dave Meyer and Katie Napier are with us this evening. Former auditors.
Good evening, and thanks for having us out. My name is Dave Meyer, and with me is Katie Napier. Katie is the manager on the audit. I'm the partner on the audit, and we're talking about the audit of your fiscal year ended June 30th, 2018. And without jumping into any of the reports just yet, I'll talk a little bit about what we do during an audit. You maintain a general ledger, and you record all your transactions in that ledger. And so basically that's what we're auditing, is your ledger, your records of what took place during the year, what balances you have at the end of the year. Now, we don't look at every single transaction, but we do tests. And some of the areas specifically that we look at are cash and investments. So we want to make sure that the amounts that you're reporting in your ledger match what you actually have at the bank. So we send letters to the bank, they confirm balances to us. We test your bank reconciliations, make sure they make sense. In the area of revenues, we confirm your property tax revenues with the county and make sure that you allocate the revenues correctly in accordance with the levy that you passed. We look at grant revenues. We confirm those with the state of Illinois and make sure that you properly reported those grant revenues in your ledger. On the side of expenditures, we test, again, we don't look at every single transaction, but we test specific expenditures to make sure that there's documentation to support those expenditures, that those expenditures that were made were for school purposes. In the area of salaries, again, we test individuals to make sure that they are being paid what they're supposed to be being paid according to their contracts. We also do special testing on grants. You qualify for what's called the Single Audit Act. You're spending greater than $750,000 per year of federal dollars, and so there's additional testing that needs to be done on grants. We also look at bonds, making sure you're making your bond payments, and capital assets, making sure that you're capitalizing assets according to your policies. So that's kind of a flavor of what we do during an audit. We look at many, many documents, and we want to say that the staff did a fantastic job of providing us with everything we needed. We work a lot with Kelly Luzzo and others during the audit, and they did a great job in getting us everything we needed to complete our audit. I'm going to go through some of the pages of the audit, not every single page, but I think you have copies, either a paper copy or on your laptops, a PDF copy. And the audit this year, if you open up to the table of contents, you'll see there were 90 pages. So lots of information here. A lot of this, though, really is kind of review for you, because you've seen all these numbers before. They're just kind of all added together to make 1 year's worth of information. So all those treasurer's reports and bills that you approved, they're all added together here for your reading in one document. I'm going to stop first at the independent auditor's report, and all you have to do is flip the page from the table of contents. You'll see on pages 1 through 3 there's a lot of language here, but basically what we're saying is we're giving a clean opinion on your cash basis financial statements. So that's what it boils down to. You'll see on page 2 there was one paragraph talking about change in accounting principle. There was a new Governmental Accounting Standards Board statement that affected you this year. Was GASB statement number 75 that deals with reporting of post-employment benefits other than pensions. You really didn't add anything to the audit besides a lot of information in the notes to the financial statements. It didn't affect any of the balances. Flipping next to what's called the management's discussion and analysis. This was written by you. This is on pages 4 through 11. And this is, if you don't want to read the whole book and pour through all the numbers, this is a great place to stop and look, because it takes into account what happened during 2018 and compares it to what happened in 2017. And one of the tables I'd like to point out on that page, the first page rather, is on page 4. There's a table of numbers there nearer the bottom. It says it's called the changes in fund balances, modified cash basis. And this encompasses all of your operating funds, all the funds that you expend money from during the year. And if you look at that middle column there, fiscal year 2018 net change, it's a positive 7.6 million. So your fund balances at the end of 18 are 7.6 million higher than they were at the end of 17. And if we looked at this same table of numbers from the prior year audit, that showed a gain of about 4.8 million. So you went from 8.1 million at the start of fiscal year 17 till the end of fiscal year 18 to 20.6. So you had a gain of nearly 12.5 million. So the district is definitely heading in the right direction from a financial standpoint. If we went back one more year, you would have seen a loss the year previous to that of nearly 4 million, and the year prior to that was a loss of 5.5 million. So we went from the prior 2 years of losing or having our fund balances decrease to 2 years of increases, and quite substantial increases. So quite a turnaround for the district these last 2 years from a financial standpoint. I'm going to move out of the management discussion and analysis and head into what's called the basic financial statements. Beginning on page 12, there's what's called a statement of net position. And this presentation takes into account all of your regular funds, your education fund, operation and maintenance, debt service, etc. And then it also adds to that capital asset balances as well as long-term debt. And you can see the total cash and investments. And this again is one shot in time. It's June 30th, 2018. Your cash and investments of 29.4 million. You can see the capital assets. There was about 157 million. That counts depreciation as well. You move down a little further, you see the tax anticipation warrants in the liability section, 9 million, and then you've got your bonds payable, and then down at the bottom you've got your total net position of a negative 53.9 million. I'm going to flip the page to the statement of activities, and this looks similar to the prior year. There's one line I'm going to point out, and we'll talk about it a little bit later. There's a line in the middle of the page under the general revenues and special item section. Down near the bottom it says special item, loss on impairment of capital asset, negative 76 million. So you can see that really impacted the operations of the district for this year. Your total change in net position was negative 69 million. Without that 76, you would have had a positive 7 million or so for the year. Now that takes into account, again, capital asset adjustments, not necessarily just the funds. We'll talk about the funds in a second. Moving forward, the next page is the balance sheet of just the governmental funds. It doesn't take into account, this leaves out capital assets information and long-term debt information. These are your actual fund balances of your funds, and you can see the final ending fund balance. Same number we looked at on page 4. It was 20.6 million. That's in the total column. I'm on page 14 right now. Total column, total fund balances of all the funds added together, 20.6 million. Jumping ahead 2 more pages, I'm going to stop at page 16. And again, we'll see that same if we look at that total column, total of all your funds, and we look at the total change in net fund balances, it's 3 line items from the bottom, 7.6. So you had a total gain between all your funds, again, 7.6 million. And a couple items on this page I'd like to point out. There's the last, if you look at the revenues received, the line just above the total, it says on behalf payments from state, 33.5 million. There's a direct offsetting expense for 33.5 down below. You don't actually physically receive that money. That's the money that the state of Illinois says they are putting into the teacher's retirement system and also into the teacher's health insurance system on behalf of your instructors. So that money didn't really come to you, but it has to get reported in your financial statements because the Governmental Accounting Standards Board statement says you need to. A couple other line items in the revenues. If you look at earnings on investments, it's about the 5th line down, and look at that grand total, $237,000. In 2017, that number was $73,000. So by having these increased fund balances, increased cash balances, you're able to earn more earnings on your investments. So you picked up about $164,000 over the prior year because of your greater balances. So that helps out the bottom line. And another thing, we'll stop and look at the short-term debt in a little bit, but if you look under expenditures dispersed, and there's a line item called debt service, interest and fees, and just in the general fund, and the general fund here, it encompasses actually 4 of your funds. It's your education, your operation and maintenance, working cash, and tort. This interest and fees, that's the interest you paid on your tax anticipation warrants. So $258,000. But that number was actually, in 2017, that number was $316,000. So you borrowed less money, and that equated to paying less in interest costs. So again, the greater your fund balances are, the less reliant you are on tax anticipation warrants, which means you'll pay less in interest and you'll earn more interest income. And then if you notice at the bottom, the fund balances end of the year, they're all positive now. In the prior year, a couple of the funds were in a deficit situation. That's no longer the case. All of your fund balances in each of your funds are now on the positive side. Again, that's a good thing. Moving forward, beginning on page 20 and all the way through page 55 are what's called notes to the financial statements. These are required disclosures. There's a lot of information here. The first note talks about the summary of your significant accounting policies. I'm not going to stop on every single note. You can certainly read those on your own. There's notes in here about capital assets, long-term debt, cash and investments. There's many, many pages in here about the employee retirement system. So you've got notes in there about the IMRF, TRS, and then of course that new note I spoke about the post-employment benefits, that's in here as well. I do want to stop at one page, and it's going to be page 30. And so on page 30, at the very top, it says note number 6, it's short-term debt. And in the center of the page, there's a table of numbers, and you can see the tax anticipation warrants at the beginning of the fiscal year were $15.5 million. You borrowed an additional you borrowed an additional $24 million, paid off $30.5. You're down to $9 million at the end of the fiscal year. So heading in the right direction on the tax anticipation warrants. And then there's a table of numbers just below that about long-term debt, and you can see the general obligation bonds. You paid down another $7.1 million of principal there, and you're left with $239 million to be paid in the future, of which $8.2 million is going to be paid in the fiscal year that just started. So again, no new borrowings, and the debt is going down. So that's again, a good thing. After all the notes to the statements, there's one note on 55, and we'll come back to that in a minute. That relates to that special item, impairment of assets. We'll come back to that note. Right after the notes to the financial statements, there's what's called other information. There's some budgetary comparison information here, and then there's information relating to the pensions, the Illinois Municipal Retirement Fund, the teacher's retirement system, and then also a schedule for your other post-employment benefits. These are all what would be, if you're on the GAAP basis, required supplementary information. We include this as other information here when you're on the GAAP basis. Jumping forward to after those other information, there's schedules here that show a lot more detail than what was presented in the front of the book. Beginning on page 66, there's a schedule of assets, liabilities, and fund balance by account for the general fund. And you can see the funds that make up the general fund. Again, education, operation and maintenance, working cash, and tort. And you can see their balances. And again, the fund balances at the end of the year, which is the second line from the bottom. I'm on page 66, total fund balances. And you can see all the balances are now positive. Some of those were negative in the prior year. Moving forward, you'll see that beginning on page 70, there's the education fund, and it shows all the detail now of revenues and expenditures by object. There's a column that shows your final budget, what actually happened. There's a variance column, and then there's also a column of numbers for 2017, so you can kind of see where were we a year ago, where were we this most recent year, how did we do in comparison to the budget, and each fund has a schedule just like this, presented one right after the other. I won't spend a lot of time on those. Again, it's kind of a lot of review for you. You've seen a lot of these numbers already. They're just totaled up into one document here. I will stop again now at, I'm going to jump all the way to near the back of the book on page 87. 87 is the schedule of assessed valuations, rates, and extensions. And this is a 10-year presentation, so you can see what the equalized assessed value of the district has been over the last 10 years. And if you go all the way to the far right column, 2008, we're showing 10 years here, and then the EAV started to go down. That was after the housing market crash, and you can see you got all the way to a low point in 2014 of 3.4 billion, and now the last 3 years has shown increases. So over the last year, the EAV went up 3.7%. You're back to 3.8 billion, and you can see the property tax dollars that the district expects to collect is that total tax extension of 80.8 million from the 2017 taxes. You had already collected roughly a little over half of that as of June, and then the other half is being collected now, or was mostly collected last month in September. So the point I was making, though, the EAV is back on the rise now for 3 years in a row. And then I'm going to jump now to page 90. And page 90 shows the schedule of operating expenditures per student. How much does it cost to have a student come to Layton Way High School District? And you can see at the very bottom, your net operating expenditures were 80 million, yet with an average daily attendance of 6,313 students, that works out to $12,675. Your amount for last year was $12,381, so you're up a little bit there from the prior year. And if you compare yourself to the other high school districts in Illinois, you were, out of the 96 that reported, you were 78. So there were 77 that were higher than you in cost per student. So you're near the bottom quadrant as far as how much it costs to educate students. I told you we'd get back to that one note to financial statements, and I'll jump back to that now. And this has to do with the special item. When you closed North High School, that was 2 audits ago. It was a brand new thing back in 2016. Last year, 2017, we had mentioned that we wanted you to get a value for that building because it not being used as a school anymore. The Governmental Accounting Standards Board has a statement number 42 that talks about impairment of capital assets. And because the school was not being used as a school, we had urged you to get a value for us. That would come from an appraisal. And at the end of 17, that had not been completed yet. So we kind of gave you a pass, if you will, for that year, but we urged strongly that you've got to get this done. You did so in this most recent year. That value is available to you now, and so you were behooved, if you will, by the GASB to make an adjustment to the value of the building. And so that building went from its original asset value of $114 million down to, well, you can read it in here, all the numbers are here, down to $15.8 million. And that'll be the carrying value of the building going forward. And that's what resulted in that impairment loss that we talked about a little earlier of $76 million. Any questions at this time about the whole audit, what we do as auditors, about the numbers you see here specifically, what adjustments that might have been made, that sort of thing?
Questions for David?
Now this is, we do have other documents to go through, but we're just talking specifically about the financial
Please stay
statements.
on that special item just for a moment. What are some of the standards or triggers that have GASB 42 kick in? GASB statement number 42 that impairs a capital asset, especially to the extent that that building was impaired. What causes that to happen?
Well, if you're changing the use of the building from it being an asset that was built in to be used for educating students, and then you're not going to use the building for that in the future, that's what triggers it.
So the major trigger is it was built for an educational purposes, students were no longer being educated there, it's sitting dormant, big red flag, time to take a look at it from an impairment perspective, or a potential impairment perspective.
Correct.
Which was determined because obviously it was on the books for X, the current market value is Y. You made a statement a little bit earlier, I want to make sure I clarify it. On page 13, when you commented about the special item, you said, let's see how it impacted the operations. You didn't mean the actual day-to-day operations, just the way that it reflected on the balance sheet at that point in time?
Yes, that affects only the first 2 statements that we looked at, the statement of activities and the statement of net position. There is no effect whatsoever on your fund balances.
Which is our true operating.
Right, your true operating cash, your true operating revenues, your true operating expenditures. This is what I would call more of a paper adjustment, if you will, where we're saying that the value of the building is recorded as a capital asset. We're going to bring that down to its value as determined, but it's not affecting your fund balances. As we saw, the fund balances were all up from the prior year.
And once again, it was driven by the GASB, or the Government Accounting Standards Board practice, that you as an accountant, the auditor, are beholden to say that this is the way that this should be handled.
Yes.
Okay.
And you can answer this, but why does the impairment impact one set of financial statements and then not the other? So, if that makes sense.
Like the balance sheet versus.
Balance sheet versus that, yes. So, why one and not the other?
Well, one of them is dealing with what's called your fund financial statements. That's where you see just the governmental funds. When the GASB introduced what was called GASB statement number 34 back about a dozen years ago, they wanted to continue to show fund financial statements, but also try to make governments be more like regular companies and then include long-term debt and capital assets. Now those items, yes, you spent money for those items, but they're long-term in nature, and governmental funds are very short-term in nature. So there's a different perspective. We're looking at very, very short-term. From a governmental standpoint, we have only very current assets, cash. In your case, you're on the cash basis. But we're not going to count as assets items that are going to last us 30 years, 50 years. They'll get grouped up into what's called governmental activities. Same thing with the long-term debt. You don't see that long-term debt in the governmental funds, but you see it in the governmental activities. So that long-term debt provided you with dollars to spend when you built the schools, and you're paying that debt off, so it's still reported in your financial statements on the government-wide or governmental activities, but it's not a current liability, and so it doesn't get reported in the governmental funds. It's just a perspective difference. Does that kind of make sense? I know there's a lot of accounting jargon and rules and such, but governmental accounting can be quite complex with all the different funds and the different rules and such.
So it's a balance sheet adjustment.
Right, it's a balance sheet adjustment, and the special item had to get reflected in what's your statement of activities. That's how it works. We did, if we're done with that point, we can move along to, we'll talk briefly about some of the other reports. One of them called the single audit. Oh, I did want to mention another thing too, that the information that's in the financial statements, it all gets reported to the State Board of Education. They have a special Excel financial statement document that has to get completed. That document was completed and was forwarded on to the State Board of Education. And inside there, they do what's called a financial profile score. It's actually called an estimated financial profile score. And your profile score had been watch, and this time now it's projected to be warning, which is a step up from the watch list. So that again, moving in the right direction.
Even with the impairment.
Yeah, the impairment doesn't get reported in that document because it's on a fund financial statement basis.
It's making you say it out loud.
So one of the other documents though that we have is what's called a single audit. And I kind of mentioned it earlier that you spend more than $750,000 of federal dollars. And so we do some special testing on federal grants. And I'm pleased to report that we did not have any findings in the single audit report. So from what we tested, we were able to see that you were complying with the grants that we tested, and you're reporting all of the different balances as you need to in accordance with the State Board of Education's requirements.
What are the testing standards, and what percentage of transactions do you think you're testing?
Well, the testing standards require us to follow what's called a compliance supplement that's issued by the Office of Management and Budget from the federal level. And within there, we have to test a specific amount of at least 40% of your federal dollars. So we really kind of go beyond that in certain cases where we're making sure every single revenue can trace back to a source document. And then on the expenditure side, we do sampling. And I think we looked at the special education grant, if I'm not mistaken. And that would include, the IDEA flow through, and that would include testing expenditures that were spent out of that grant line item. The specific number, there's not a specific requirement to test a specific number of transactions, but we have to test a specific percent of the dollars. Any other questions on the single audit? Then we also issue a couple of letters to you, and I'm going to have Katie come up and talk a little bit about the letters that we issued.
Good evening. There was 3 letters, I believe, that were included with your packet. The first one I'll just touch on briefly. That is the communication with those charged with governance during audit planning. That's a required communication from us to the district, talking about what our responsibility is as auditors and what the district's responsibility is. The second letter is communication with those charged with governance at the conclusion of the audit. Again, another required communication between us as auditors and you as the district. That one talks a little bit about some of the significant accounting estimates, reports that no difficulties were encountered in performing the audit, no disagreements with management. Attached also to that letter are the journal entries that were proposed during the audit. So if you took the district's trial balance that was given, added these adjustments, those are the numbers that you'll see in the financials that Dave had talked about earlier.
Was there anything out of the ordinary in these journal entries? I mean, they look similar to ones I've seen in the past.
Yes, very similar to the past. Also, I do note the ones that have client do not post on there, those are adjustments that we would not expect the district to make. Those are not the ones that are affecting your funds 10 through 90 or 80.
So what are they for?
Long-term debt and capital assets. The last letter is the management letter. So as Dave had touched on, no material weaknesses, no significant deficiencies, but there were a couple areas that we noted that there could be some improvement on. I do want to note that when we started this audit in fiscal 16, I believe there were somewhere around 15 comments. There are now 2 remaining. So the district has really done a great job working diligently in trying to correct some of these areas. The first comment was the comprehensive policies and procedures manual that states the district operates under numerous policies and board directives. However, the district has not developed a comprehensive procedures manual documenting all its administrative and accounting functions. A procedures manual summarizes the daily function of administrative and accounting personnel and details the individual procedures required to perform their duties. So as auditors, we recommend the district develop a comprehensive policy and procedures manual that includes policies and procedures for all finance-related functions. The second comment had to do with capital assets. During our audit, we noted the district had not had a capital assets inventory performed in at least the last 5 years. Also, the district has not established written policies and procedures for the maintenance of capital assets inventory. Our recommendation as auditors, we recommend the district establish written policies and procedures for the maintenance of the capital assets inventory. We also recommend the district implement a computerized capital assets module in your GL software, which is Skyward, to track capital asset additions and deletions. Any questions on any of those items?
Going back to the comprehensive policies and procedures manual and looking at the fraud risk assessment, what are you recommending there? It's the second paragraph on the policies and procedures manual.
Yeah, what we'd like to see is all of our governments are exposed to risks related to fraud. And this would be like a brainstorming session. What are we exposed to? What threats are out there? And how can we be proactive in looking at those threats and trying to have policies in place that would eliminate some of those risks, or at least bring them to a pretty low level.
So you're just highlighting an item you would have in this policies and procedures manual.
That would be a part of it, yes, absolutely.
But you found no inherent or obvious opportunities for risk of fraud as part of your audit? You're not implying that?
No, we're not implying that whatsoever. If we would have found anything, it would have been reported to you. Yeah, we're just saying, let's be proactive, let's have this fraud risk assessment internally.
So the management response here, can that be explained to the board?
Yes. Brad, go ahead as you put this together.
Yeah, so we're already working on this. You know, we kind of had some preliminary.
Give Brad the mic.
Thank you. You know, so we've already began work on this. We are looking for, in this current fiscal year, we'll be looking to team with an outside agency to help with that because we want some independence. So we'll be doing an RFP, get some proposals, and then have that completed and ready and done for board adoption prior to the end of 2019. As far as the second comment regarding the capital asset, we will begin then to work on that one to have it completed for the end of 2020. Both of these require a substantial amount of work and with a little bit of a price tag, around $10,000 to $12,000 worth of exterior consulting possibly, so we'll do them over 2 different fiscal years.
I'd like to see the list down to 2.
For the procedural as well, not functional operation. Anything, Ron? Yeah. Joe? No? Okay. Thank you so much for your time. Thank you for your work.
Thank you.
Next, we'll move on to the consent agenda. The consent agenda exists of approval of the regular meeting minutes of September 20th, 2018, approval of the closed meeting minutes of September 20th, 2018, approval of the payroll of October 5th, 2018, approval of the District 210 advisory minutes from September 10th, 2018, out-of-state travel. Does any member wish to have any item pulled and discussed separately? If not, I'd entertain a motion for the consent agenda as presented. We have a motion. Is there a second? Second. Motion and a second. Any discussion? If not, vote.
The vote is open. The vote is unanimous. The motion passes.
Thank you.